Chapter 3, Part 2. Now what we're going to do is process costing journals, T accounts, which I always like to do when you're doing so many journals and you're trying to figure out balances, and how to apply overhead based on percentage of labor. So this is kind of a good diagram. What ends up happening is we buy into raw materials and we then turn around and issue them as direct materials and indirect materials. Direct materials goes to work in process depending on, and it can be as part of roasting or blending in this example, and we also apply it to overhead. Then we do the same thing with payroll. Payroll is going to be applied to overhead and both processes. Then we're going to apply the overhead to both processes, and then we're going to transfer from work in process roasting when they're complete into work in process blending, and then when that's complete it's going to go to finished goods, and then when it's sold it's going to go to cost of goods sold. So that's a good idea of what the flow is like. Now here is our problem that we're going to work on right here, and we're going to do the journal entries for all of this. Now, first, we're going to record raw materials and overhead purchases. Also, when I'm doing a problem like this, I really like to do T accounts because I'm a visual. I have to see it. So what information do we need? Because we're going to do the T accounts, we need beginning and ending balances. Because some of these, like when you're going from one process to another, you need to know how much actually transferred out. And then the other thing we need for our journals is we need to figure out how much raw materials we purchased and what actual overhead costs we incurred. So I've highlighted the information you need. I like to do this whenever I'm working a problem. I always like to identify the information that I need. Now, for the purchase of the raw materials, it's going to be raw materials inventory accounts payable. And for the overhead, it would be overhead accounts payable. Now let's take a look at these lovely T accounts that I did for you. Look at that. Okay, again, this is what I like to do because this helps you keep track. Whenever you're doing a problem where there's a lot of journal entries and they want to know something at the end, so what I did was I put in the beginning and ending balance for each account. Don't have a balance for factory overhead, and cost of goods sold is going to be whatever we end up with at the end. So now let's put in the entries we just made. So A, that would be our purchases of direct materials, and this would be our miscellaneous overhead costs. Now we're going to record the issuing of raw materials to WIP and overhead. Again, I go through when I'm working a problem, I highlighted what we need. And now we can do our journals. So to record the direct materials used, it's going to be work in process weaving, work in process sewing, and then we're going to credit raw materials inventory. And for overhead, we're going to increase factory overhead and decrease raw materials. So now let's see what that looks like in our T accounts. We see it coming out of raw materials. We see it going to weaving. We see it going to sewing. And we see it going to overhead. Now let's record our direct and indirect labor. So again, I highlight what we need so that I can then do my journal entries. So for the record the direct labor, it would be again work in process weaving and sewing separately, and then a credit to salaries payable. And then to record the indirect labor. Now, the only question I have about this problem is if I had that much factory overhead for salaries, I think I'd try to identify a third process because that's a pretty heavy amount of labor just going into overhead that you cannot tie to the product. So this is my opinion. So now what we're going to do is we're going to take a look at our T accounts and we're going to book those. There's our labor for weaving, our labor for sewing, and our labor for overhead. Now we're going to apply our factory overhead. Now, because it's based on labor dollars, which it tells you in the problem, we're going to take the amount of labor and then we're going to take it times the overhead rates. So this is what it looks like. And now we can do our journals and apply our factory overhead. And here we go. And there's our credit for overhead. Now we're going to go through and compute cost of goods transferred to sewing, compute cost of goods transferred to finished goods, and compute cost of goods sold. Now, in this case, what we need to do in order to find out cost of goods transferred to sewing and cost of goods transferred to finished goods, we need to back into solve by looking at our T account balances. So we'll start with weaving. How much was transferred out of weaving? So what we're going to do is we're going to take our beginning balance plus our direct materials plus our direct labor plus our overhead, and then remember you always have to back out the ending balance. And that tells us that $23.70 was transferred into sewing. Now we're going to determine how much was transferred from sewing to finished goods. We're going to take our $570 plus our $75 plus our $360 plus our $540 plus our $23.70, and again remember to back out the ending balance. Now we can determine how much went to cost of goods sold. We're going to take the $1,266,000 plus the transfer in from sewing minus the ending balance, and it tells us that we sold $2,370,000 worth of goods. That's going to go to cost of goods sold. Now, another thing you'd want to do is add up the debits and credits and overhead, and in this case it equals 0, so we're not under or over applied in this example. And then the other thing I would do is check raw materials to make sure that adds up. And if you take the 120 plus the 500,000 minus the 315 minus the 120, it does equal 185, the ending balance. So we know we've done that correctly. Now our journals, this is what they're going to look like. And remember, when we do the finished cost of goods sold, we're also going to book the sale. Now, what does that look like on the financial statements? Sales minus cost of goods sold gives us this gross profit, and here is our total factory inventory. And that ends Chapter 3.